Real estate is the quiet villain in the climate crisis. Though may not be a Jafar or a Scar loudly proclaiming the damage it's wreaking on the environment, according to some estimates, the real estate industry is responsible for up to 40% of carbon emissions worldwide. In cities that are major real estate markets like New York, Los Angeles, Chicago, that number might be a lot higher. Why has the real estate industry been unwilling and unable to confront the climate crisis? I'm joined by Brendan Wallace. He's the co-founder and managing partner at Fifth Wall Ventures, and his partner on his climate tech fund, Greg Smithies. So I think maybe we should just start from the news of the day. So today, right before this interview, Fifth Wall announced that it's received its first commitment for its climate change fund, and that comes from a major Canadian pension fund, Ivanhoe Cambridge. Brendan, if you want to just talk to us about the kind of the significance of that investment.
It's really a kind of validation of what we've been saying for a while, which is that if you're truly committed to decarbonizing as an industry, and we can talk more about what the real estate industry is responsible for when it comes to climate change. We can kind of unpack all those stats, but suffice it to say, it's a lot, right?
Mm-hmm.
Has a lot of work to do.
Mm-hmm.
What's exciting about what Ivanhoe Cambridge did is they're committing to the R&D of climate tech, right? So they are committing to the science, the development of new technologies, of new products that can actually reduce the carbon footprint of the real estate industry to zero. There's a lot of noise out there. But what this really represents is the first time I think you're seeing a large institutional allocator say, we are going to put our money where our mouth is, and we are going to commit to the science of decarbonizing our industry. And we are going to recognize that to do that requires us to do something different than what we've done in the past.
Mm-hmm.
Not buy carbon offsets, not deploy technology that already exists, not talk about it on Bloomberg, actually invest. And I think that's exciting and should be celebrated.
You had, Greg, you had made this distinction between boring technology. So stuff that's out there, you just need to implement it. It's a question of scaling the technology to get it into the hands of the biggest operators in the world. And that's one way to sort of make a dent in the problem. You'd also talked, and this was probably a newish concept for a lot of people, about science risk. You had talked about technologies that really move the needle.
What the industry as a whole thinks they are doing is investing in climate technology when they're going and, say, installing solar panels on the roof of their buildings. And it's not to say they shouldn't be doing that, but you have to draw a distinction between implementing existing technologies and investing in the new technologies that are required to solve the other half of the climate problem. And what I mean by the other half is literally today, if you took all the best technology on the planet right now, the best solar panels, the highest efficiency HVAC motors, everything, and installed them 100% across all of your buildings, you'd only solve about 44% of the total carbon problem for the industry, right? It's a big amount, but it's less than half, right? And so when we talk about actually investing in R&D, we have to start investing in the new sciencey technologies that are going to solve the other half of the problem. And the other half of the problem there is going to take a while to bake. And so you've actually got to start investing in it now in order for it to be ready for us to use after we've implemented all of the existing technologies.
And it's fair to assume that the failure rate on that science risk bucket is a lot higher. The timeline's a lot longer, right? When you're talking to LPs, when you're talking to investors, how are you making those distinctions clear?
The first thing is actually getting real estate owners to see what Greg just mentioned, which is that they're like, oh no, we're investing in climate tech. We already invest in climate tech. We just did a massive green bond issuance and deployed solar on our roofs. It's like, no. That's not investing. That's called buying other people's products. That's not investing. That's deploying, right? When I buy a Tesla, I'm not investing in Tesla, right? When I buy a carton of milk from the store, I'm not investing in the milk company, right? The milk manufacturing. So one, it's not investing. The first is to get them to see that. The second part that I think is a big logical leap is for real estate companies to understand that, they have this reflexive response of, well, I'm a real estate company. Why would I invest in science and R&D? That's not what I do. I buy buildings. And so part of it is painting this picture of, yes, that is what you historically have done, but you now have a whole new problem, an existential one. And it is that regulators are coming after you and they are going to tax you if you don't do this 2, tenants are not going to lease space from you. 3, like capital markets are not going to lend to you or insure you. And 4, you might be underwater because you can't move your building. So just to be clear, the business of doing real estate ain't the same in the future as it was in the past. And so that means being a real estate company means being a science investor. That is a massive mental leap. This is hard stuff. This is like materials tech. These are gigantic physics problems. How do we solve it?
There's pocketbook problems. You can say, hey, with this technology, I can cut your HVAC costs by 5%. I can cut your OPEX by 12% per annum, XYZ. Now, a real estate operator gets that, right? You get that. Then there's the existential problem, which has always been a tomorrow problem, right? Yep. So you got an office developer in Miami. Can you realistically convince them that if you don't do anything about this, the building we're sitting in right now, it's going to be submerged until, the 5th story or the 10th story or something?
Well, I think there's actually a fantastic measure now, which is that the capital markets are forward-looking in nature, and they do something which is they price things according to how much risk they're starting to see in things, right? So actually, we're starting to get to a point where your CFO at a real estate company actually doesn't have to be that creative in thinking, could this building be underwater? Because it turns out that the capital markets are starting to price this into the cost of capital when they lend into those buildings, right? And what is a fantastic analogy to this is what we're seeing in the oil and gas industry right now, which is there's this concept of stranded assets, right? And in a most extreme case, a stranded asset would be, in the case of a building or an oil plant, something that is like, say, underwater or on fire because of climate change. But there's a more subtle form of stranded assets, which happens a lot sooner, which is they are stranded because you can no longer finance them because the public markets will not lend debt to them, for example. And as of 2017, the delta in the interest rates between green building projects and quote unquote non-green building projects was about 50 bips, right? 50 bips is very sizable in our low interest rate world right now. As of 2019, it had almost doubled, but we can see the jaws are opening here. So your CFO at that real estate company doesn't actually have to think, creatively, do I think this building's going to be underwater? No, the public markets are going to tell them very rapidly now.
You remember the Gulf of Mexico spill, the BP oil spill?
Yeah. That
seared into my brain. At the time, I didn't care about climate change, but I remember that incident. I remember the sort of the outcry, the feedback, the PR nightmare that it was for BP for a decade, and it very quickly, just that incident ushered in so many. I'm not an oil and gas expert, but it ushered in so many changes in how all companies in that field had to do business. Right? There is nothing in terms of real estate that can give you that same sort of visceral thing.
I agree. I think that's the challenge. Is it's non-intuitive to most people that the real estate industry is the single largest industry culprit when it comes to climate change. It's just that it's hiding in plain sight. I mean, at a certain level, it is intuitive, right? Which is that the US economy happens indoors. It happens inside real estate. So it should be no surprise that the CO2 emissions from our economy are coming out of our real estate assets, right? That's almost definitional. But most people, when they say, well, what would you focus on to truly mitigate climate change? What's the biggest lever we can turn? You hear a lot of, we should focus on the energy industry. We should focus on mining. We should focus on the automotive industry. We should focus on plastic straws, right? And the reality is that actually none of those things are the biggest lever we can turn. The biggest lever we can turn is the real estate industry. And what I think is so profound.
Let me ask you, if it's 40%, which is such a jaw-dropping figure, and if that 40% has been true for the last decade or two, it couldn't have just been you guys that saw it, right?
It's kind of like a left pocket, right pocket thing, because it depends where are you looking at supply side or demand side, right? And most of the world, up to maybe the last, 3 or 4 years, have really looked at the carbon problem from a supply side, which is oil is coming out of the ground, coal is coming out of the ground, right? That's the supply side. And then doing the stack rank of where does the CO2 come from in our sources of energy. But it's only in the last couple of years that people have started thinking about it. No, actually, you have to also affect the demand side of the problem, right? And when you look at it from the demand side, that's when you say, okay, transportation is this much, buildings are this much, industrial processes are this much. So it's more of a flip in how we've already done the accounting, but it's always been true.
There is a realization at the consumer level. I am now more mindful of how I go about my day. I almost make no difference if the real estate industry doesn't really get their act together, I guess is what you're getting at. Greg,
can I mention something though? There is a way you can make a difference. It's just a little bit non-intuitive. And it's that when you're leasing space or when you're buying a house, the questions you can ask of your landlord make a way bigger difference on mitigating the climate crisis than the car you buy or the plastic straw you do not use. The real estate industry, candidly, has known this for a while. Mm-hmm. Any real estate company sees their energy bills. Mm-hmm. They know where the energy is coming from. They know where it ends up. And so this is kind of the weird dynamic, is that it's kind of the culprit that's right in front of us. It's so obvious, it's hard to see. It's like the blind spot in front of your face.
Climate change is not an American problem. It is a global problem. So many cities, if you look at the evolution of where they are in sort of climate change wokeness, maybe, you know, a city like Kuala Lumpur or Mumbai or Delhi is not even on the sort of scale at the moment. So a lot of your, you know, LPs have buildings and ownership across the globe. Now, how do you convey to them? Now they might understand that, hey, I probably need to do something in New York, because if I don't by 2030, I'm going to get dinged quite severely. But how do you convey that that's something they need to do worldwide? Okay.
It actually turns out that if anything, America's behind. Europe is far ahead. Like that's very clear. Yeah. But then in Asia, especially, we've seen the sort of sleeping tigers in Asia. When they wake up and start moving, right, they move very quickly. In the last 18 months, we've seen China sign up for a 2060 net zero goal. And you know, when China decides to actually do something, like they make it happen, right? Yeah. Behind the scenes, how it actually happens, maybe there's some weird stuff that goes on, but right, they make it happen. On the back of that, we've seen Vietnam is going to be one of the world's largest rollouts of clean energy, and one of the I think they're putting a couple of gigawatts of solar power in the next year, right? India is going to also be a renewable energy powerhouse, and they're phasing out a lot of the use of coal. So I think we're seeing these things where we actually thought that, say, the third world wasn't going to have the money to do this stuff. It's actually very similar to how we saw, say, the rollout of cell phones back in the late 90s and 2000s. That
right, Africa basically leapfrogged a complete generation.
Right. And when you look at the cost of clean technologies are coming down that cost curve so fast, right now it is cheaper for about 70% of the world's population. It is cheaper to build new clean power than it is to keep a coal plant running. Right. And so I see that vast majority of the world's economies are going to move this way very rapidly.
I don't know if there's any other country, maybe outside of Europe, where the regulatory pushback is strong enough to make this happen.
Well, but I think you've got a carrot and a stick thing here, right? Where you need the threat of regulations. You don't actually necessarily need the regulations to be impactful, because at the same time, you've also got that carrot of the OpEx side of building efficiency. And that's my point to the technologies that are coming down this cost curve so fast that the CapEx payback periods just make sense. And I love to talk about this concept of a climate Trojan horse, right? These technologies that your CFO wants to install, even if he cares nothing about the environment. And we're just seeing more and more technologies that fall into that bucket, where you can be willfully ignorant to climate change. You can have no regulatory oversight on you, and you still want to implement these technologies because they just make business sense. And the number of technologies that are in that bucket is expanding sort of daily.
And so you want to basically take altruism out of the equation as much as you can, right? Because we don't want to leave that to real estate to make an ethical or moral judgment as much as we just want it to make sense.
We would love the ethical imperative to be there. So, sorry, Brendan. But to the extent you actually want a technology to take over the world, right? Altruism probably doesn't need to be the main driver, or shouldn't be the main driver, right? If you look to how Elon built Tesla, his number one, and by the way, you've gone.
I know the background.
Right? Yeah. So Elon's number one sort of insight was it doesn't matter how much climate impact one of your products has if you can't go and sell, say, 100 million of them, right? Mm-hmm. You actually have to have a product that the world wants to buy in order for impact to be scaled. And right now we're seeing a lot of these technologies that actually are going to have global impact because you can take altruism out of the equation.
Right. I just wanted to draw out another point, which is the kind of core collective action problem here, mm-hmm. which is part of the challenge with the real estate industry as a whole is that there's this long tail granularity to the industry, meaning what can any individual real estate owner do on their own? Now, there's kind of a full ecosystem, right, of how capital flows into the real estate industry. And that's why I do think Ivanhoe Cambridge's commitment to our fund sends a strong signal, right? Because it's starting at the top. It is starting with the origin of where a lot of this capital is flowing into the real estate industry. But the other thing is that if the private sector, the private real estate sector does not coalesce around creating some kind of a solution here to solve the fact that today we can only get about 50% of the way there towards solving the real estate industry's operational carbon footprint. If they can't figure that out, who will figure it out for them? Regulators. You know what that looks like? Taxes. So just to be clear, your question of altruism versus expediency, I totally get it. But if the real estate industry does not figure out how to start moving billions of dollars into the science of decarbonizing itself, regulators will. So it's kind of a question of which path does the real estate industry want to go down, mm-hmm. right? Does it want government and regulators to figure this out for them? That actually connects with what the opportunity is. So by the same token that the real estate industry is 40% of all CO2 emissions, definitionally, it's about to become the single biggest consumer mm-hmm. of climate tech. Mm-hmm. Just to be clear, climate tech, which everyone is talking about right now, everyone's excited about the demand side. The demand side is 40% real estate. That's what it is. It's 40% real estate. So the real estate industry is going to create billions, probably trillions of dollars of enterprise value in climate tech. And right now it's sitting on its hands saying, this is too hard. I don't get it. I can't figure it out.
Beyond the public LPs, beyond the Brookfields, the Relateds of the world, et cetera, real estate is still largely a dynastic business. So father to son to grandfather, et cetera, it happens. So they are designed or programmed to take a long view on this. And I'm surprised that there hasn't been too much from the sort of the grand old dynasties, the families of New York, families in California on this issue.
Sure. Because some real estate companies will get this and they will start to transform themselves and they will start to look something not quite like what we thought of a real estate company historically, but a little bit more like a real estate company meets R&D lab for climate tech meets energy company. And the ones that do will look like Tesla stock versus all the other automobile manufacturers. That's not just a culpability. It is if you don't do anything. Mm-hmm. It could be an opportunity. To the extent I decarbonize, to the extent I can build the most energy efficient real estate, to the extent I'm identifying these technologies much earlier, to the extent I recharacterize my business as a sustainability forward real estate company, perhaps that company, 10 years, 15 years down the road, takes all the market share. They get all the capital. And that is what I think is afoot. Like we are kind of like where the automobile industry was. Greg, what would you say? 2006, 2007?
Yeah, roughly. Yeah. And we saw how quickly that moved. And also just because I think people use the automotive industry and the fact that I came from BMW, I think it's and then Elon world, like it's a tried and true example. But how about just a completely different example in the oil and gas industry, right? Where you have Orsted, who is the Danish oil major. They flipped on a dime and basically said one day, we are going to become a 100% renewable energy company. We're going to divest ourselves out of oil and gas 100%. And they have turned on a dime. They're now the world's largest offshore wind owner and operator. Their stock in the last 2 years is up 300%, whilst all of the rest of the oil majors are down on average, like 20 or 30%.
So scenario one is, we don't do this. We're a real estate company. We don't do climate tech. We're not able to figure this out. I can tell you where those CEOs and where those real estate companies are going because capital markets Darwinism does work. They are on the wrong side of history and it will end poorly for them. Scenario 2 is, no, we're doing that today. And you talk to the head of ESG or you talk to the head of sustainability and they talk about, oh, we're building gardens on our roofs and, we won this or that award and, we won this standard in our industry. And it's like a bunch of kind of decorative, theatrical, right, sometimes greenwashy type things that you do see in the industry. That's not a long-term solution.
Pretty much every building worth its salt in New York is LEED gold, LEED silver, something or the other. Is that moving the needle in any way besides a nice image on your website?
There is work being done, and those things are being done, and they are saving energy, and they are important. But the hard problems, the fundamental hard problems of getting real estate assets to true carbon zero, they are in front of us, not behind us. It's not a question of adopting what we have today. It is yet to be created. And the gap, the delta there is literally billions of dollars going into science and R&D. So just to be clear, we get 44% of the way there now, having solved a lot of the easy problems. The void between us and 100% is going to be way more expensive than what it took to get us to 44%. So we have a gigantic hole to dig ourselves out.
Real estate is really a business of certainty. You can look at a pile of dirt and you can pencil out, right? A good operator worth their salt.
Just to edit you, used to be a business of certainty.
Okay, fair. But you could essentially pencil out your deal. Okay, this is what I'm going to pay per foot. This is what blah, blah, blah. And you're going to break it down. So it didn't take, they love to think of themselves as very creative people, but it didn't really take too much creativity. It took guts and tenacity to be a good operator. You're talking about there's a leap of faith element involved in what you guys are doing specifically with this fund, right? So those conversations must be fascinating when you're having them.
They are. And I use examples of the fact that, 10 years ago, data center companies and tower companies and cold storage companies, those weren't real estate companies. Those were tech companies. Now everyone understands those are real estate companies. And I've said this for a while every time I talk to real estate CEOs. The biggest real estate companies 10 years from today might not even exist today. And today, they might be in Fifth Wall's portfolio and they might look a lot like tech companies and you might get confused because that's the confusing future we're entering where real estate and tech are not just colliding in a way where it's enablement technology. Oh, I can do what I already used to do previously, faster, cheaper, easier with less friction. Yes, tech is that and prop tech is that. There's been a lot of value created in that. But what the future of real estate means is technology. And we've said that with respect to prop tech. But I think what you're hearing from us now is that an even bigger, and I would say more imminent collision is the fact that real estate companies are going to look like sustainability and energy and decarbonization businesses in the future. They are not like the model of we don't invest in climate tech, we don't do R&D. That's the dinosaurs. Those are the dinosaurs, right? They are watching the meteor come. And so what I think has always been hard, honestly, for Fifth Wall, and we've been saying this, is that everything I'm saying sounds threatening, right? And it sounds scary and it sounds
You're scolding people in a way, right? It's hard to take, right?
It's scolding them to do the right thing.
Right.
And we've done this with tech successfully. It's that tech is not a journey. It's not fun. It's existential to your business. And the same thing is true of climate tech. The future of the real estate business is a sustainability business. And if you don't get that, you're not going to be a real estate company anymore. But the point I was getting at, Hiten, is that this can be seen as scary, but it's actually an opportunity. For real estate companies that embrace this, they have this power of incumbency. They can recharacterize and reinvent their business and start investing in the tech to change what it is they do. And I think the Tesla of real estate, commercial real estate, residential real estate, it is being built right now.
You're familiar with the giving pledge, right? The whole billionaires pledge to give away. I have the skepticism that your developers and operators would sign something similar for real estate, but then not do anything about it. They would make that rhetorical leap. They would make that PR leap, but not necessarily follow through on the actual tech side, on the investment side. Before we started chatting, you mentioned that according to your own research, there's been about $94.6 million invested in climate tech. That's laughable. That's half of an NOI of a large
from
company.
The real estate industry.
Right. I could see developers, operators start talking about climate tech, suddenly using the jargon that's been out there, right? But moving it to the actual development of technology, implementation of technology is it's going to be a fight.
So I was actually going to paint a picture through a little bit of a story here, which I think is going to show kind of how I legitimately think this market might play out, right? Which is, let's say hypothetically, Fifth Wall's climate tech fund is going out. Well, this is literally what we're doing, and we are putting money into companies that are inventing the new technology that are required to build carbon zero buildings, right? We happen to invest in this company. Let's just call them Building to Zero Incorporated, right? They have invented the only way in the world to build a high-rise building commercial scale that is net zero, right? Fifth Wall's LPs, by virtue of the fact that they are invested in the funds, are the only commercial real estate folks who get access to this company's technology. Now, all of a sudden, they are the only people in the world who can build net zero high-rises. At that point in time, they are the only people who can say, this is a truly net zero building. They get the best tenants into those buildings. They get the best cost of capital on those buildings. And all of a sudden, if you happen to just be invested in this company at the right point in time, now all of a sudden you are that real estate owner whose stock is going through the roof, and everybody else who doesn't have access to this technology is basically being relegated to Class B stock, right?
And this is the dynamic, like the reality of where decarbonization in the real estate industry is headed and how much like tech and science dictates it means that if you're not running at full speed at this, like you have to run to stay in the same place. It's like the Red Queen from Alice in Wonderland, right? Like doing a little bit is falling behind. And you highlighted this number of, look, the real estate industry has invested $94 million by our measurement into climate tech over the last decade, and that's the entire industry. So on the one hand, that's like an embarrassing stat. That's like half a parking garage, So it is embarrassing on the one hand, and I hope that it's prompting for real estate owners to kind of
just for our listeners in context. That's one apartment in a penthouse in Manhattan on 57th Street. There's been apartments that have sold for 3 times that even. So just go ahead.
Yeah, exactly. It's a ridiculous number, but I don't really say it to paint a shaming picture. It's really lost opportunity, right? That everyone loses from. The real estate industry, if it's responsible for 40% of all CO2 emissions, could have created a lot of value for itself, for the world, for the climate, by virtue of doing some of these things it's just getting around to doing now. It's mulling over now. So the reality is, like, we don't have that much time. We don't have that much time for real estate owners to figure this out on their own. So whether it's shaming, whether it's empirical data, I don't care. What I care about is that the real estate industry embraces a decarbonized future.
Greg, during the space race, there were, the US and the Soviet Union are going out there trying to get into space. But in the process of doing that, there were so many technologies that were invented that now have larger real world applications across so many industries, healthcare, delivery, transportation, you name it. Is there any sort of potential for what you're looking at now in the built environment to, essentially you're almost telling real estate owners, if this is true, get in now, fix your own stuff, be good with regulators right now, become leading real estate companies, but also have kind of a stake in the upside of something that could then become, across industry.
No, I think there absolutely is. Long term, it's actually, frankly, it's inevitable that is going to happen. This is just kind of like how industries grow, right? And any big spurt of R&D that's driven by, be it war, be it the space race, we see this 100% of the time. You see a massive push into R&D. There are always these fantastic spillover effects. So we can almost, as a truism, say that is going to happen. The question is really, what are the specific examples? And it might be a little bit too early to tell, but I can give you one that is kind of like it's early, it's near enough term that we can probably start talking about it, and we're going to see it, which is, for example, if you are a large multifamily homeowner, right, and you all of a sudden have got a whole bunch of your tenants are coming in and parking their Teslas and other electric vehicles in the parking lots, and every single one of them is asking you for a charger. You could go to a Volta or someone else and get them to install chargers, or you could realize that maybe you're sitting on one of the largest assets in the world, which is parking spots with chargers in them, and you decide that on top of being a multifamily owner, I'm also going to be an electric vehicle charging company, right? And it turns out that instead of buying chargers from Volta for, say, $200,000 a pop, or renting out those spaces to them and getting $2 per charge from them, I can actually go and source chargers directly from China for $5,000 a pop. I know how to install chargers, right? I'm in the construction and building management industry, right? And I can myself maybe drive $100, $200, $300 million line item of revenue around energy services just to the electric vehicles in my parking lots, right? Now, that doesn't take that much thinking outside the box to come up with. But we're going to see examples of that over and over again. The number of opportunities that people are going to bump into in the space is mind-boggling.
Brendan, exactly. Before I want to ask you something, because it's on my mind. Your thesis, please correct me if I'm wrong, but your overall thesis for Fifth Wall, as I understand it, is finding what you think is the smartest startup in the space, and then essentially trying to play kingmaker for them. So not only saying that I will, bet on you and provide you money, I will also open up doors for you with, 60 of the biggest operators in the world. And so you have a built-in book of business. And then I will also find a way to take other portfolio companies in my pool and find a way to integrate you guys so that you can go to an operator and show them a suite of services that is incredibly powerful. Is there any element of climate change sort of factoring into the suite of products that you've already bet on? And what do those conversations look like?
It's the same. What we intend to do with Fifth Wall's Climate Tech Fund is really following the playbook as our North American Real Estate Tech Fund, which is we are going to aggregate the largest, so using our kind of technology fund as the paradigm. What we did is we aggregated the largest, most institutional, most technology forward real estate owner operator developers who wanted to use Fifth Wall as a conduit to invest in the best technologies, not just do it themselves, but identify the best technologies and then adopt them. And in so doing, those companies generated enormous amounts of strategic value. We generated enormous financial return for our investors. And I actually think the whole ecosystem of prop tech was better as a result. In climate tech, it's the same thing. You're just really swapping the word prop tech for climate tech, meaning we're going to build a consortium of the largest, most institutional, most sustainability forward real estate owner operator developers that want to access climate tech earlier, faster, sooner than everyone else because they're committed to it and want to adopt it. And in so doing, we can open the aperture of all these distribution lanes to this entire consortium. But you painted only one side of the picture, which I just want to paint and go back to the other side of the picture, which is the real estate corporates themselves. So like using our prop tech fund as an example, Lennar, largest US home builder, investor in Fifth Wall's first fund. You have reported, I think, very widely on all of the major transactions that have happened in Fifth Wall's residential fintech portfolio. Lennar announced on their most recent earnings call that one, they had returned from our investments, the companies we brought to them, $1.5 billion to their balance sheet. That's a real number for any company, number one. And number two, they built this SpinCo where they're kind of spinning out these non-core businesses and doing things around technology that I think are going to be really profound. But in so doing, they recharacterized what they were to Wall Street, to themselves, internally, culturally. They're a platform. And so what I think shouldn't be missed is, yes, there's an enormous amount of value to be created in prop tech and climate tech. And yes, every real estate owner that cares about it should, invest in some way. Of course, I'm biased. I think they should do it as a consortium, but they should start doing it. But the biggest opportunity for real estate companies is to change and recharacterize who they are and what they do.
Yep.
It's the conversation we've been having. You are no longer an amalgamation. You're no longer an amalgam of assets, right? That's valued as a bunch of NOIs that are all like thrown together. Real estate companies are platforms, and platforms create opportunities to do things like what Lennar did, like invest in climate tech, like decarbonize really aggressively and transform your business.
So I talked about my Wrangler, which I bought in November. I've already put 5,000 miles on it because I love the road trips and all that. I realize that it's a gas guzzling disgrace. I realize that, but I love that car so much. I'm not willing to part with it necessarily. I am, however, willing to figure out a way to offset it, pay an extra tax, pay a monthly surcharge, whatever I can. But I would only do that if it was fairly capturing me, not, hey, this is a Wrangler that's 3.6 liters, etc. I wanted to capture my activity, the way I use the car. Now, I want to extend that analogy to buildings. Is there any sort of measurement of climate impact that is serious, that is tailor-made to that building and the use cases in that building, which means tenants and all that? Is there any sort of movement towards getting there?
Well, let's actually maybe chat about a premise of your question, which is that offsetting works.
Yeah. Yep.
Because I think that is the big premise that we as a whole industry, and not just real estate, all industries really need to figure out. And the fact of the matter is, unfortunately, offsetting is not going to get us out of this problem. If you just take a look at all of the companies that have announced net zero goals, right? There's hundreds of them now, and you just do the quick back of the envelope on how all of them are getting to net zero, and they're all just piling a whole bunch of stuff into the offsetting bucket, right? And then you figure out what are the things we can use to offset, right? Planting trees right now, maybe some sequestration underground, but not a lot of it. Pumping CO2 into fracking wells is one of them, which seems a little counterintuitive. But if you literally add up all of those and then say, how much land mass do we have to plant those trees? We've already used up the entire offsetting capacity of the whole planet, right? So long story short, offsetting doesn't cut it. So I know this is a bit of a dodge on your question, but it's more of a rude awakening to the industry that offsetting doesn't cut it. And actually, we do need to start cutting CO2 out of the underlying operating businesses and the buildings themselves.
And the media gets that now too, right?
Yep.
Like we were just talking about this, right? We saw this, right? With what happened with Brookfield, right? The chairman of Brookfield says, we're net zero. And what he actually meant is that they had done something called like aggregate avoided emissions, which is basically the equivalent of saying, I lost weight because I didn't gain weight, right? It's a ridiculous construct, right? To kind of build a net zero claim around, or offsets, which is the equivalent of kind of like in the scale analogy, it's like putting 1 foot on the ground, being like, oh, I lost 20 pounds, right? You didn't lose 20 pounds. You just kind of use this offset. And I think that's just dimension one of the public, the media, regulators starting to get that these claims are spurious, right? Or deliberately misleading.
There is no good way at the moment, even when, let's talk New York, Local Law 97. The criteria that they applied was 50,000 odd buildings. What was the cutoff? I can't forget, but they used a size criteria. Buildings larger
than 30,000 square feet.
Right. So that's a very arbitrary criteria that does not really account for the nuances of usage, tenants, kind of like it doesn't really account for years, year of construction. Older buildings might be less energy efficient. So when you do this catch-all kind of thing, what it typically results in, and we've seen this in property taxes and real estate, it results in exemptions, it results in challenges, it results in legal back and forth to the point where you actually don't collect very much money. So my question is still, is there any sort of progress being made on the asset level, specific asset level measurement of energy usage, carbon emissions that can be applied in a way that is fair, in a way that is transparent? I'd love to get a sense of that.
Yeah, there is, and actually, just as I think this is one of the most interesting places for us to actually invest as a venture fund, because I think there are going to be a bunch of sort of data science-y analytics type companies here, the same way that we've seen the weather company and a whole bunch of other places in like more general data aggregation around GIS data. You have built some very large businesses in that space, and I think we're going to see a similar size potential venture opportunity around analytics and data to do with the whole carbon economy coming up. It is early days right now, but at the same time, I don't think I would be being bombastic if I said I see a new one of these companies every week.
Are there like any examples from other industries that have been heartening?
The best example is a company called Kairos that works almost exclusively in the oil and gas industry. And they are going down to an asset level. They are doing, how much energy is coming out of the ground from a particular well. They're doing methane leaks out of those wells, everything like really specific down to the asset class. And offhand, I think they've at this point raised a couple $100 million.
I'm curious, you're coming from a purely outsider perspective. I know Brendan was at Blackstone and at least has a sense of how these real estate people think. You're coming at it from a pretty far away industry. I'd love to get a sense, of the kind of color in those conversations when you're having them.
I really find the most pragmatic thing to do is to talk about things in terms that the current industry really understands, right? And the current industry, building owners and operators and all of the investors here, they understand cost of capital, right? They understand, say, depreciation on assets. And if we can really couch this in terms of your depreciation on your assets is going to be higher if you don't do something, your OpEx is going to be higher, and your cost of capital is going to be higher if you don't do something about it. That is very persuasive to a lot of people. Now, that is not necessarily going to catch the laggards who are, willfully ignorant to this stuff. But I think it is a way to get into the hearts and minds of the fat middle of the industry. And then the way that Brendan talks about this a lot, which is really the ethical imperative and the opportunity, the ability to really remake your business and be a leader and be the Tesla of real estate, right? That is going to get your bleeding edge people.
When we just did something, I want to say last month on South Florida real estate and climate change. And it was shockingly, the rah-rahness of Florida is already quite something, but when we asked them this question directly, like look at sea level rising, so look at the sea level rise in South Florida, look at how many hurricanes there have been in the last 5 years, et cetera. There is still an element like, hey, that's, it's a question, but that's all it is right now. It's a question. So that shift hasn't quite happened in many markets. It hasn't quite happened in the sort of minds and eyes of many developers. But to your point, there's this triple threat now, right? And that could probably push them over. We need to wrap up in a minute or two, but I wanted to just ask about this. Why isn't there any at the moment? You guys are off the industry, but not quite. There doesn't seem to be any discussion of real estate's role in climate change at sort of the big boys table. I'm talking about at Davos, at the UN, at places like that. There isn't like a Rob Spire who owns close to 100 million square feet across the world. Why isn't Rob Spire at the table when these conversations are happening about the future of the world and how we're going to save it?
Yeah, I can start on this, and I think you've also got some thoughts here. So I think some people may have missed this, right? But in Biden's campaign, operational efficiency in buildings, I think, was number 2, if not number 3, on his list of things that he campaigned on that he was going to do around climate, right? And you could argue that the sort of climate leg of the stool was pretty much one of the strongest ones that got him elected here, right? So I would say, at least on the pull-through side, from the big boys table, right? This is actually a very large item that they want to focus on. And if you go and read through the bills and the quote unquote Green New Deal stuff, and then also the not Green New Deal stuff, but the actual stuff that might make it in, there are significant portions of that do look at building efficiency as significant stimulus portions of them, and also areas that they want to focus on because, and this is a stat that we looked at recently, for every $1 million that you invest in clean energy, on average, it creates around about 4 jobs. Whereas for every $1 million you invest in building efficiency, like operational efficiency retrofits, it creates somewhere between 14 and 16 jobs, right? 3 to 4 times the number of jobs per dollar invested. And so as you look at most global economies right now need to try and do two things or trying to do two things. One is they're trying to pull their economies out of a nosedive and create jobs. And two, they're trying to greenify, right? Building operational efficiency is on pretty much everybody's lists from the demand side, from the government side. So I think it's a fantastic question. Why isn't Rob Speyer at the table, right? Mm-hmm. Because government wants him to be.
I had a conversation with Senator Whitehouse of Rhode Island. Mm. And I asked actually a very similar question to what you asked. And I was like, why is the real estate industry not more visible, not more proactive in this? And why are there industry groups not more proactive in this? And
which was one of, just before, one of the biggest opponents of the local law 97 was the Real Estate Board of New York.
Absolutely.
Just for context. Right? Yeah.
No, and I think that's true. And I can't speak to every real estate owner, but what he said, what the senator said was that the fossil fuel industry basically is out for blood. And their lobbying groups and how they show up in government is they are ready for war. And it's not that the real estate industry isn't committed to it. It's just, it's not ready for war. So they kind of step down and they recede into the background. But I actually think, again, and this is maybe the optimism in me, I think it creates an opportunity. And I don't know whether it's Rob Speyer or not. I don't know who it is. Maybe he's watching this or she's watching this right now. But I think someone should. I think the real estate industry has an opportunity to recharacterize itself and to say, yes, we are responsible for this. And there's good reason for it. The economy happens indoors. So yes, we accept this responsibility. So I'm not doubting that most real estate firms might continue to do what they always did. But I'm already certain that some are not doing that. Some are leaning into the future. I want to just be clear, this, I think, represents optimism. There's an opportunity for real estate firms to step up. And I don't want the fact that the real estate industry hasn't done anything historically to be a long-term indictment of it, because we can't reinvent the past, right? All we have is the future. And the future of the world depends on this.